From Allianz, gracious to have you with us. So I'd love to sort of start off, we can just introduce ourselves. I'm Joel, I've been a promoter for 5 years, before that a couple tech companies. Now at Eve we're building technology to help event companies be more efficient and then helping support insurance companies like Allianz offer better insurance.
And hi there, my name is Ali McLean, currently working for Allianz, a huge global insurer. We work in the specialty area, focusing on live events globally. Prior to that I've worked in the London market for around 10 to 15 years, and I actually used to work in Joel's position as a broker as well. So I have experience of arranging insurance as well as actually paying the losses that we've seen coming in over the past couple of years. So yeah, hopefully a balanced view on both sides of the fence.
Please don't paint me as a broker too quickly. That's not the position that I like to be painted in. I'm a promoter. That's what I'm going to stick as. So, yeah, what we'd really love to talk about is kind of like how the last couple of 18 months, 2 years has really changed event insurance as a whole, and what it's meant for insurance companies and promoters. I think it's usually a pretty boring topic for people to talk about with insurance. But especially as things have changed, it's become something that's much more important to what everybody's doing today, and actually probably more difficult for both sides, both the organizers and the insurance companies. So maybe if we talk a little bit about the elephant in the room, which is how things have changed over the last 18 months and how it's impacted insurance companies for one, I think.
Yeah, absolutely. It's probably easiest just to touch on the product itself so that we just understand exactly what it was and where maybe some of the losses have come from. So event cancellation insurance, it does exactly what it says on the tin. If you've got a financial interest in an event, the policyholder would buy cover in respect of their potential loss that they could have, either due to loss of costs or the loss of revenue if the event has to be binned. And so, as you can imagine, over the past 18 months, there has been a lot of events cancelled. It started off in February of last year, where we had first notifications that some events in Europe were in doubt, and then it moved on to the UK and then into the US. All down to government order to say there was a ban on public gatherings, and if a policyholder had bought an extension for communicable disease, which is sometimes covered, sometimes not, then the cover would apply, and as a result there were millions of pounds worth of claims which have been paid. So yeah, it's been a really turbulent 18 months. I think even prior to that, globally, the type of business that we insure, the results have been quite mixed. We talk about insurance being cyclical, so we talk about there being a soft market where there's an abundance of capacity, lots of insurers looking to insure events, prices are pretty low, scope of cover is pretty broad. People were losing money as a result of that, and actually we'd started to move into a hardening market, so some people had already pulled out of the insurance market for events, and then that was then compounded by the pandemic that we've had over the past 12-18 months. So we're starting to see that recovery now coming through. It's great to be at events like this that we can see getting back up and running, and we love that we're being involved in this today, and the fact that we have the opportunity to insure some of these events again. That's a great tick, but it's certainly been a very turbulent past 18 months, and we've seen a real contraction in the market, but thankfully we're still here, we're committed to it, and we're happy to be underwriting these type of events in the future.
How do you think that the product's changed from the perspective of the organizers today? Do you see people being more interested in understanding it, or do they not understand the product?
I think you touch on a point at the start there, which is, you know, insurance is insurance. It's the best way to end a conversation at a dinner party, to say the line of industry that you work in. So we know that a lot of the time we are bottom of the chain when it comes to planning an event. There's certain parts of insurance that people need to buy contractually, so for the public liability or the event liability, employer's liability, we know they have to do that. And sometimes event cancellation cover can be something of a luxury purchase if they think that the event is well managed and they maybe don't need the coverage. But I think the way that the pandemic has affected public gatherings and how sensitive events have been to government or local authority restrictions, it's certainly brought it more to the forefront of people's minds when they are looking at insuring their event. So I think in the future we will see more inquiries. I think we'll probably see more people looking to purchase the cover. In terms of the product itself, I think the product was pretty broad anyway, and I think it covered anything ranging from natural catastrophe through to the building burning down, through to terrorism, through to civil commotion. So it's a real broad number of triggers that could have caused a loss under the policies. So that element of cover is still there. Obviously, apart from the government bonded scheme, there's no COVID coverage anymore because we got whacked by it, and it's a systemic loss and potentially not something that people can insure in the future. But in terms of the rest of the scope of cover, it's still there, the product is strong, and I think it's something that people will look to buy in the future. And you're right, I think it will probably be higher up the list of things they might consider when organising an event such as this.
Yeah, I think that was one of the difficult things when I was a promoter, was that we didn't really know what it covered. We just sort of trusted, like, okay, this went wrong, and we'll just pray that the insurer pays out.
Yeah.
And then I think we saw during COVID, a lot of insurance companies decided to not do that and lost a lot of trust in the market in general for what is covered and isn't. And it's opened more questions for people of what that is. With the biggest question always being, is COVID covered? The answer is always no. And I think how that kind of changes in the future is going to affect the perspective of the relationship, really.
Yeah, for sure. There's, I think Holland was the first country to actually set up a government-backed scheme. And so if you were an event organiser or a promoter or anyone with a financial interest in an event, you could then apply to the government scheme to get protection for your event should it need to be shut down due to COVID, or I think due to a future communicable disease outbreak, be it epidemic or pandemic or a localised outbreak. In the UK government-backed scheme has just launched 22nd of September, so it's been running for just over a month now. That provides coverage just in respect of COVID-19 if the government updates their legislation or it introduces new legislation, which means that your event cannot be held, it needs to be postponed, or if you need to amend your event and you need to pay something additional to put on, like we've seen here with the security checks coming through to make sure that everyone's in a safe environment. So you might have some additional costs that you incur because of that. So again, that is then covered. I should flag, Allianz are not actually part of that scheme at the moment, it's still under consideration, but there are a number of insurers and then the UK government that do participate in that scheme at the moment. So COVID coverage is available on a government-backed scheme, but for an individual insurer to take on what we call the burning building, it's still smouldering at the moment. As I said before, it's lovely to see that these type of events are now taking place. But I think more generally, we're still worried about the infection rate, we're worried about the hospitalisation rate and the death rate thereon, and therefore is there a knock-on effect that we could have that Parliament say, actually we need to bring in a further lockdown, be it nearer to Christmas or January, and so those events that we're planning for, certainly we couldn't incur any more losses because of that. We've already sustained sufficient losses for that. I think the coffers are dry. But from a government perspective, they see that there is a real need to get the events industry back up and running, and rightly so. And therefore there is the fund which is now in place, which people can gain access to and get coverage for COVID-19 through to September next year for when their events are due to take place.
I mean, one of the questions we always get is, why don't you offer COVID coverage as a broker or as an insurance company? I mean, aside from the economical side of things, what is it about, like, the uncertainty of COVID that you don't want to cover as an insurer?
Yeah, it's a good question, and one that we do get asked quite frequently. I think other risks that we insure are far more quantifiable, and you can ring fence it, and you can, so say for terrorism, if there was, touch wood there won't be, but if there was something that went bang in London today, you know that it would affect the London region. You might have a shutdown for 24 hours. It might go on for slightly longer at the venue where the attack maybe took place. But you know that things should be back to normal within a period of 2 weeks, say. So if we use 9/11 as an example, there was restriction on airspace, people couldn't move, people couldn't travel to events, but even a month afterwards, events were still taking place. So we have a very good idea that if there was something serious that happened from a terrorism perspective, and let's hope it doesn't, but if it did, we knew that we would have a set aggregation. We have an idea of the frequency of when this might occur. We can price for it. We can manage our capacity that we might deploy to that given city or given region. If I then flip that to what we call a systemic risk, which is a pandemic outbreak, we might say, well, we want to limit the amount of coverage we give in the UK and the amount of coverage we give in France or Germany or Russia or the US. But we know that they could all be affected simultaneously, which is what we saw over the past year. So therefore, we have a number of losses, a number of events with no end date, and a number of different regions affected at the same time. And that's why the losses escalated to the extent that they did. That's not. I think I mentioned before. This is not to get the violin out and say, "Oh, poor old insurers," because that's exactly the type of cover that we said we would provide. But I think in terms of the breadth of the pandemic and how long it's gone on for, obviously I wasn't around for the Spanish flu back in 1918 to 1919, but that's kind of the only comparison that we have in terms of the number of different regions it affected simultaneously, the number of people it affected, restriction on travel even back then was imposed. Fast forward 100 years and here we are now in this current climate with such a restriction on public gatherings that's not something that we can insure again in the future for now.
It's even difficult coming out of like the respective COVID where live events or insurance in general, like you said, needs to normally be a quantifiable risk, something with lots of data. So people look at, you can go online and buy home insurance from a million different insurance companies in 5 minutes, right? But for event insurance, it's incredibly difficult coverage to find and buy, and it's difficult for even the insurance companies to understand. I mean, even pre-COVID, we were looking at prices for total coverage with like general liability and everything else of 8% of the overall budget of an event. I mean, that's gone up massively as a result of the pandemic and the market with lots of different insurers pulling out. Now, do you think that there's like this change of how you as an insurer have to think about the actual risk of an event now that you've kind of had this tightening of the market and the change in perspective? If you want to look at things from a more quantifiable perspective, has there been something lacking before where you wouldn't have the right access to the information, or there hasn't been enough direct access to the customers before?
I think in terms of the data that we had available, that was improving certainly. We've certainly had discussions before about the sort of weather data that we might have access to, whereby previously, you'd look up a website and that was as good as the data that you could get. Now there's far more detailed data on a granular basis, down to the different types of risk that we might be covering, be it a storm or a hurricane or just a festival. If there's a thunderstorm incoming, we've insured a number of events in the US previously, where they have excellent weather tracking systems and they can see a storm incoming and they know that they might have to evacuate. If it's a downtown festival, send everyone away to the bars, go and have a couple of drinks, we'll be reopened in an hour. Or if it's rural, go to your car, sit in your car for an hour, tune into the radio, come back out in an hour. So the weather data that we have there is really, really useful, and that's been something that we've seen increase and improve over the past, I would say, 5 to 10 years. We're seeing even better data coming through now. But I think in terms of the move to specific data with regard to an event, that's something that we've only really seen the development in the past 2 or 3 years. And I think the move to a lot of the events that we see are still cash operated, but where we have had the e-bracelet, and we have that loaded up with cash and we can see people's buying pattern and that sort of thing, that's something that's really, really useful for us. I think, as I mentioned before, it's for anyone's financial interest in an event. So if we have an event organizer and they're insuring their revenue, and some of their revenue comes from bar takings or merchandise, then we can see from previous events where if people have been using their barcodes, we know exactly when they might have purchased, what they might have, how many beers they might have bought, how many t-shirts they might have bought, when they bought it. So if we have a future event, and this is an example that we had for an event in Chicago, whereby they did have to shut down because a thunderstorm was incoming, it wasn't safe. So they interrupted the event, shut down for 2 hours. It meant the bar sales were down, it meant the merchandising was down for that period of time. But then everyone was allowed back in, they saw the headline events, and the event continued as it was meant to, and it completed for the evening. But for that 2 hour period, we were able to gauge that against like-for-like event that we had the previous year and see what the revenue was during that period. And therefore, that's better for the client, because it means that if we say to them, well, what was your actual loss, they can quantify it very easily. And so that kind of data is really, really good for us. It means that the claim situation is far easier for us, and it's beneficial for the client. We don't have to spend ages going through a spreadsheet. We can actually say, right, that's your loss, you've quantified it, you can prove it, and we'll cut you a check for that, and there you go, that's the loss that we have.
So it's a lot about now getting to have that closer relationship with the organizers and understanding what they're really doing, right?
Yeah.
I think that also happens to the organizer now understanding more of what it is that goes wrong in the moment. I mean, everyone who's running events knows what can happen, knows how to fix the problems, but you've got so many things going on at once, to try and catch up with them is the biggest issue there.
Yeah.
Do you find that you now have, you can act a lot faster in helping with those issues rather than just, because we always used to see it as a binary thing, right? It was always either everything went horribly wrong and it was complete cancellation, or it went amazing and we're all happy, we all made money. Do you see there as being like an in-between now, like in the relationship?
I think there's always been an in-between. We work very closely with some of our loss adjusters who are on call 24/7. A good example of that, actually, we insured some festivals in the US only earlier this year, and we were monitoring the storm track of Hurricane Ida as it came into Louisiana, knowing that we had some events on the East Coast and in the southeast of US. I think that the storm tracking facility that we had that maybe we didn't have in previous years meant that that client was able to jump on it and then look at, right, okay, do we actually need to evacuate? Do we need to put in additional trackway? Do we need to put down additional mulch? What do we need to do? Because for me, I'd far rather that they spent more money to make sure the event goes ahead and then we pay a proportion of what the potential loss could have been, rather than them saying at day one, we've got Hurricane Ida coming in, it might hit us, it might not, but we haven't really got the data to be able to say it's going to go this way or that way, so we're going to cancel the event in its entirety, and then we have a total loss. If there's a way that we can actually make an educated decision to say the storm track is going this way, the event organizer has got this data at their fingertips, they know that these people are due to arrive here, we've got these people in situ, therefore we can manage the event and we can spend some more money to make sure the event goes ahead as a result of that tech that they've got in place. Thumbs up. I'm more than happy with that. Bad example, as it was, Hurricane Ida just kept on blowing all the way through into Tennessee, and the event was cancelled in its entirety in the end anyway, and we paid the loss for that, which again is what the cover is there for. But I think it was great that we had the early discussion prior to the event weekend, and that was due to the fact that we had better data that we were able to tap into, but also better communication as well with the guys on site, so the organizer or the security teams that were there and in situ in Nashville.
I think we always assume as customers of insurance that like the insurance company just doesn't want to pay out and doesn't want to be helpful, but in reality, you're saying that you want to be there and actually be helpful in the moment, right? So I think that we've seen then for things like from a data perspective, let's say Bonnaroo, for example, cancelled for the first time in 15 years of existence, and it was it's a Live Nation event. They've always had a really good reputation for putting it on, but I think it was also part of Hurricane Ida that cancelled it, right?
That's right.
I mean, then that's the kind of risk where you just can't do anything about it. You can't control the weather. You could not have forecasted that they've had this perfect history of running events. Same thing goes for ACL that happened, run by the same company. So at that point, that's really what it comes down to as an insurer, that is the disaster moment, right, of what it is you're covering, as opposed to these smaller things that you can change. So how do we think more like getting people to understand that the insurance company isn't just trying to not pay out, right, which is always the scary thing. And I think we saw a lot of that during COVID, where a lot of insurance companies just didn't pay and they refused to do that. I mean, at least from what I understand, Allianz actually had a very good reputation for following through during COVID and supporting people in those crisis moments.
Absolutely. No, I think our product only works based on the claims that we do pay, and that's the proof that's in the pudding. And we made sure that we were conscious that everyone was hurting, and as I said before, I don't want this to be a violin. Poor insurers, you've lost millions of pounds. Well, yes, we have, but you paid for the cover. So therefore, if the cover's there and you've bought the communicable disease cover, which should respond to exactly this situation, we want to work with you to get you the money as soon as possible. Because whilst we were hurting and we were having to change the way that we worked, and we worked remotely, and everyone was at home, same as everyone would have seen. But we wanted to make sure that people who were suffering and did have cash flow issues because their events were not taking place and they had that loss of revenue, we wanted to make sure that we got that money to those guys, because then it meant that hopefully the situation we are now, 12 months, 18 months forward, those companies are, I would hope, touch wood, still in business, and therefore they're able to hold events in the future, whether it's dance music events or conferences, exhibitions like this, or sports events, award ceremonies, anyone that's involved in that. If we've helped them to actually maintain their cash flow and therefore stay in business, and therefore they're still here at the end of this and hopefully willing to buy coverage again from us, that's the role that I think we should play. I'm not interested in paying out a short-term deal and then running away and not insuring those events again in the future. I want to be here for the longer term. Like, I would rather be here in 10 years' time and say that, yes, we paid out some cash on Bonnaroo, but then I'm still insuring Bonnaroo in years to come because they see the merit in it, and they see that, you know, we're going to be here for the longer term. We've paid out before, we can pay out again. But I want to partner up with those people as well and make sure that we're not running away from it. We're not saying, oh, we had that loss from the terrible pandemic and now we're heads in the sand and we're not going to do that anymore. That doesn't work for me. I think we should be there longer term.
And I think as a customer, you never go around saying like, oh my God, I feel so protected. No, it's when somebody pays out and sticks with you that you're going to go, oh my God, this was a great product that I ended up buying and I want to do more work with them.
Yeah.
How do you think that works then where coming out of COVID, prices have increased by 2 to 3x across the market, right? So whereas before it might have been 6 to 8%, we are seeing some insurance quotes that are getting into pretty insane numbers of 15, 20% of the budget of an event, really, for full coverage. Do you see that, like, there being a transition or something that organizers have to do to help bring that down, or is there what the closer relationship with the organizer on your side? What's the future looking like over the next 1 to 2 years for that?
I think it's... I think, as I mentioned before, the market's cyclical. So we went from the soft market, which was kind of mid-2000s, up to probably 2018, 2019. And I think a number of event organisers would have experienced some really great prices. If I was an event organiser, I would have been buying coverage at that time because it was incredibly cheap in comparison to where we were previously.
You're an insurer, you'll always say that it's cheap, but, you know.
I think in terms of the money that we had in the pot, it wasn't quite enough to cover the losses that you can quite easily foresee. We know that every year we're going to, in the UK, we're going to have the tail end of a couple of hurricanes that blow across the Atlantic, and it's going to affect some of the events that we have in July or August or September. We've seen it. Boardmasters is a great example of that, whereby that's quite foreseeable. We're happy to insure it, because it doesn't happen every year, but it's quite foreseeable that you would have that. And we just need to make sure that we were pricing that coverage accordingly. Where I think we fell down is that we weren't pricing it, and I mean we as a market, not Allianz. I mean we generally were not pricing it appropriately, and therefore there wasn't enough money in the kitty to pay for those losses that were coming in. So there was already a resurgence in terms of prices needing to go up, which was then compounded by the pandemic. So yes, absolutely you're right, the prices have increased. Because we need to make sure that we've got enough in the kitty. Going back to, as I said before, I want to be there in the longer term. I want to make sure that I'm still paying the losses in the future and I've still got a job and I'm there to pay those losses. But at the same time, it is really important that we do know the clients and we get to know the type of event that they're insuring. That they're holding. And therefore, the more communication that we have within an event organizer, in terms of either doing a site visit or speaking personally, rather than having a go-between, which can sometimes blur the lines, I think that's really important in making sure that you understand the event and how it's run. We talk about this thing called moral hazards when we're talking about event cancellation. So, if you insure your building, the building either burns down or it doesn't. It's very tangible. You either see it there or it's not. It's on fire or it's not. For us, it's a people thing. It's how well the event is managed. And therefore, if we get to know the person and we have claims experience with them and we see how well they've managed the event, yes, if the event had to be cancelled, but they really did a hell of a lot to try and make sure the event goes ahead. That, for me, gets them kudos because I know the way that they operate and, hey, the event might have gone ahead, but they spent X 100,000 more to make sure it went ahead. Okay, that's absolutely fine. We will pay for that as well. So I think it's the communication directly with the client, but we have to take on board that maybe the prices that people have been buying out over the last 10, 15 years are not there anymore because that was kind of an artificial market and this is getting back to where we need it to be for the long-term underwriting.
I think we sometimes see insurance companies as being the big bad person who doesn't want to pay out, doesn't want to do so, but in reality, or maybe even the customer as the one who, they just want to get a payout and make a claim. I think especially in the events industry, we all have egos to put on our shows. We want to see them be successful. We want to see tens of thousands of people have an amazing time. And everyone's just in it to have that eventual success. But it can be difficult to kind of want to have that relationship with an insurance company. I know when I was putting on shows, the last thing I want to do is think about my insurance.
Chat to your insurer. Yeah.
Right?
Yeah,
I want to get on with solving the problem that was happening.
Yeah.
So do you see that role as kind of sitting with the insurance company to do more of that? Should the promoter be the one who's reaching out to you guys, or where does that kind of come from?
I think it's a bit of both. I think it's a two-way street, and I would hope that for those events companies or sponsors or local authorities that have had claims paid during the pandemic, I would hope that they do get in contact and we have that good discussion. Because for me, I read the loss reports and I see what the loss report says, but it's great for me to actually hear it from the client themselves to say, just talk me through how that went on. I'll give you an example actually for an event, a dance music venue in London, whereby we were insuring the event there, and the claims circumstance that came through, nothing to do with the pandemic, this was prior to that, but it was a dance music event, and a guy in the crowd had swung from on a water pipe, see some of the pipes in here, and he had pulled the pipe down, and it meant that the dance floor became flooded, and therefore the event was curtailed. That was it. It was abandoned for the evening because you couldn't have people wading through the water. But in the loss report that I saw, we didn't really get that detail, but then having gone to the venue a month later and chatted to them and said what exactly went on and how did it, what happened. For me, that was fantastic. That was great to actually listen to, this is what we tried to do, this is why it was completely impossible, and we had to evacuate in the end. So it was really good to chat to them and actually understand what had happened on that evening, because in a loss report, it's kind of formal, it's bullet pointed, we don't get too much of the detail. So.
Yeah, and I think sometimes even understanding the site plan better can be important. When we were I did a lot of greenfield music events, and then we would have it where it starts raining. The example we always use is when a truck starts sinking on a production road, for example, and when you're doing a load-in, and then it just prevents it, damages the schedule. Maybe you don't have another opportunity for a different production road based on the site and things. Yeah. But we don't also have the capital at the time to pay 40,000, 50,000 ourselves for wood chips or tracking or something. Mm-hmm. But then sometimes you couldn't reach out fast enough to the insurer or a broker because you don't have that direct relationship in order to just say, hey, would you pay the 50,000 or something? Yeah. And I think a lot of that now is understanding more of people that you guys actually want to help and you want to give money in those situations, basically, right?
Our product doesn't work unless we pay claims. If we just went through year after year after year with nil claims,
it's a very bad investment product instead, right? So
for my bosses will probably say, no, you shouldn't be saying that. But for me, it doesn't. We need to pay claims for people to see the value in what the product is that we're providing. We don't want to go through year after year without paying anything. It doesn't work like that. Otherwise, we'll have an incredible drop off, and we won't have any income. And then I go back to it. It's probably third or fourth time I've said it. It's longer term underwriting. It's making sure that we are there in the future. So yeah.
Yeah, I think it's especially from our perspective now. So we at Eve, we're trying to help people build events faster, use the data from their past events to understand it more, mm-hmm. and then working with you to help you understand the risk that you're writing and make it easier to manage actually writing that risk in the first place and handling the claims information and things. It's, I think, a lot trying to get the trust on both sides to prove to people that it is safe to give this information. Nobody's trying to do anything negative by talking to you. I think sometimes people are purposely not open with their insurance companies. Mm-hmm. They tell them what they think will get them a claim as opposed to what they could actually get out of that instead before. Do you see things like deductibles changing where, because I think it used to be the perspective of, a deductible exists so that the organizer will spend that money in order to fix their own problem. But in reality, they didn't have the 50,000 sitting around waiting there for the deductible.
I think there's two things there. I think what we've seen is a contingency element to the budget coming in. So over the past 3-4 years, on the line items that we've seen in terms of a cost allocation, we've started to see a contingency element already in the budget. So they acknowledge it, especially as you say, for like a greenfield site, there's a few things that could go wrong, but we're going to put away some rainy day cash just to make sure that we've got something in the kitty to pay for that if it does come through. And sometimes that then equates to the deductible that we would have under the policy, which a lot of the time as well, it's based on if there's an event which year on year has had issues with bad weather and they haven't changed the venue and the drainage hasn't been changed and it's still at the same time of year when we know it's going to be thundery conditions, the price that is quoted might make the insurance unaffordable. So therefore they might say, well, if we take a deductible to take care of that early shutdown or that cost additional that we need to pay, that would then bring down the premium spend. So they're still secure that they have the coverage in case the whole event has to be canned, but then they pick up the tab for the smaller interruption type claim or a cost additional type claim. And certainly that's something that we've seen coming in over the past, I'd say even prior to the pandemic, but definitely since the pandemic we've seen that coming in.
So looking into the future then, do you see Allianz lost a lot of money, hundreds of millions, I'm sure, over the pandemic. Yeah. Do you see a bright future for this line of business for Allianz compared to the rest of the market?
Yeah, absolutely. No, I think we're very much committed to it. It's great that we've had the support of management as well who've said that they're committed to pushing us through into the future as well and make sure that we're there to renew those policies where we've dealt with the client over a number of years. I think I understand that there's going to be pricing pressures, And so there's going to be certain firms who just cannot afford the coverage. So there's going to be a number of firms which have to self-insure. They just have to take the risk themselves. And I think generally they'll manage that themselves. But for the other guys that we're dealing with, whereby we've seen repeat purchase year on year on year, I would hope that they stick with us. And I'd hope that we can come to a good understanding of where the coverage needs to lie and where the pricing needs to lie, so that we're there for them in the future.
I think hopefully as we come out and we're seeing more data and information about the events that are going on, then we can really start to push down the pricing as well.
Yeah.
At the end of the day, nobody wants these super high prices for insurance. At the end of the day, it's about the overall risk of what's actually happening.
For sure, it's not going to be an existential. It's not going to keep on, it's not going to keep on going and going and going. I think we'll see it for a while, and then it's going to plateau. It's cyclical, so probably 5 years from now we'll be coming back down.
Same thing happened with aviation around 9/11 and things like that, right?
Exactly that. Yeah.
So I think we've been told we have about 5 minutes left. So I don't know if there's any questions that we should open up to.
Yeah, sure. Thank you, guys. Really interesting so far, and certainly more that I'm learning about insurance. But it's like you said, I think it's a topic typically that people kind of go, insurance.
But not as boring as people think.
No, quite. Well, but you, a question came through of how you anticipate trends change in the next 5 years. I think you guys kind of answered that, but is there anything that people could look out for when they're sort of taking out their next policies and things like that?
Yeah, so I think in terms of the scope of cover that's available, I think it's a great thing, because I think some people maybe thought that they had communicable disease coverage in the past, and then it transpired that they didn't have that. So actually within a policy, there's now a lot more clarity that's needed, and this isn't coming in from the regulator or from a client compliance perspective. It's just saying that a client should know exactly the coverage that they've got, and therefore it should be a whole lot clearer in their policy document. This is getting into really boring stuff now, so I apologise, but it should be very clear the coverage that they've got. So if they think they've got coverage for terrorism, it should be documented as such. If they think that they're worried about protests in the US, they want civil commotion cover, that should be provided, and that should be bullet pointed. So I think in terms of the scope of cover, it will be as was, bar coverage for the pandemic, which not many people can provide at all now. But otherwise, I think in terms of the clarity that people have when they're buying their policy, that will be the trend. I think there should be a lot more. We call it contract certainty, so it's to make sure that you're getting the contract certain cover that you need.
So it's a little bit, I guess, like those key facts kind of type documents when you're taking out mortgages or things like that. It's going to be a little bit more
exactly
clear.
That. That's already been coming in over a number of years, but I just think there's even more emphasis. This is a real specialty niche product that not many people know about. It's a very niche element within the Lloyd's market, 1 mile that way. It's a niche area even with that. But it does need elements of clarity, and I think that's the benefit of the policyholder. They should be able to see whether they've got that cover or not.
This is a lot of what we're trying to do with our relationship at Allianz. So he'll describe us as a broker. I don't want to be called a broker ever. That's awful. But we help distribute Allianz's products, but also give them feedback from our insights into the industry on what we think the industry needs, and how you can better service the industry, and hopefully help in the future shape what those products can look like. Whether it's, I think sometimes insurance products today are seen as just coverage, and there's like a list of coverage, but in reality, what is the service that comes behind that? And that's what we're trying to do today, instead of saying, okay, here's the insurance coverage, but then here's a bunch of other things we're going to provide you that are free to help you make your events better and prevent you from needing to use the coverage in the first place. And I think we'll see an evolution of that as people understand the market better, as the insurance companies get more confident again as well.
And another point I wanted to touch on was about the kind of analytics and insight. Now, you talked about weather, and I know how trackable that is for many industries. And one of the sessions we were talking about earlier today was the kind of standardization of event data. And obviously, as we have the return from post-pandemic, things are going to go like this for quite a while. But what sort of metrics could people be looking for to help get them a more maybe transparent coverage, if that's a fair question?
So this is a lot of what we set out to do originally, was how do we just understand the operations of the events themselves? Events are just people. We all know event registration software. It tracks like who's working at the event, maybe who's attending. But really, how do you get into the meat of what's going on? I mean, we right now today we look a lot at event control. So event control people see as something they have to do, but in reality you're tracking some of the richest data of what's going on live at your event, when it happened, who dealt with it, how quickly it was dealt with. And I don't think that the insurance companies necessarily should have that direct level of access to things, and that's why the way we build it is that we act as a filter, and we pick out the information that we think is important for both sides to know to act on those things. and helping to understand more what is it that how does your event change from event to event? Like what's the biggest impact in the operations that you're having? And getting more access to data and tools which can provide those insights is what's going to have the greatest impact on Allianz's ability to back those events as well.
Yeah, certainly that would be great data to have, and I think it's something that we haven't had previously, and that's why it's attractive to work with Joel's firm, because they've set up this platform that will give us that data that previously we can see it written down on a sheet, but to actually get it in data form is fantastic.
It will make a world of difference. Gentlemen, that's all we have time for. If people want to find out a little bit more or meet you guys or ask you any questions, where's the best place to head? Joel, maybe you first.
So Eve, you can see eve.io is the website. And Allianz are...
And then, we've got it.
we can kind of Google you and you'll come up, right?
Yeah.
AGCS Entertainment is the specialty area that I work for. So it's a minefield on the website, but you'll find it.
We'll find it. Ali and Joel, thank you very much. Quick round of applause for them.